Hello value investors, thank you for joining me. My name is Michael from Deep Value Returns on Seeking Alpha. Today I want to talk to you about Faslty, what I like about Faslty, what I don't like, some good and bad points. Hopefully you'll find some thought-provoking aspects in my analysis. So let's just jump right in. So last year, Faslty was one of those stocks coming out of COVID that just the market went berserk over and everyone was incredibly bullish. Things have taken a toll and things have calmed down slightly. And now it's kind of like in that middle ground where it's not particularly expensive, but there are some considerations that I want to put out there. So the biggest question I am not capable of answering is, what's the growth rate that Faslty is going to stabilize at next year? So if Faslty can next year in 2022 put out some guidance that is growing and can actually meet the guidance that is growing at slightly higher than 30%, possibly as high as 35%, that's great. Investors would really reward that. Because right now it seems like it's tailing towards the low end of 30s and might possibly dip below 30s, and that's a mental threshold that growth investors really look for, because investors are quite forgiving when a company is growing at above 30%. They're quite forgiving if the company is investing for growth. As long as they can see that growth, investors will give a wide berth to that. So another thing that I think is worthwhile noting here is that, as I kind of alluded to, in 2020, Faslty's operating margins were negative 6%. The guidance right now at the best side is pointing towards negative 10%. So it's not really displaying that kind of strong operating leverage benefiting the company's bottom line. So just to emphasize again, from the other perspective, it's not really that big a deal. We're talking about negative 40 million. So it's not really a huge deal make or deal breaker, but it does tell you that as the company is growing its revenues, it's possibly not being that prudent towards its bottom line. So it's just something to put out there. Another aspect that I want to discuss is that Faslty's gross margins are approximately 60%. That is not something that is particularly attractive in tech right now. Although over the last 4 years, I know it's kind of oscillated significantly, but over the last 4 years, it has slightly trended higher. So that's some food for thought right there. It's not the end of the story for Faslty. It could still expand slightly more, but you have to kind of bear in mind that 60% isn't that great. I just put out just for the sake of discussion. So this is Cloudflare. This is one of Faslty's competitors in the content delivery network space, and you can see here, one, how consistent the gross margins are from Cloudflare. You can see very high 78%, just quarter in, quarter out, quarter in, quarter out. So Faslty at 60% is at least 1,800 basis points lower than Cloudflare. So you have not a lot of positive operating leverage coming from Faslty, and you have not very attractive gross margins. So these two things are worthwhile noting. Then you have a question mark of what its growth rate is going to be as we come out next year. So there's a few different things that kind of an investor needs to answer, and it's difficult. The other thing that I wanted to note is that if you just compare and contrast with Cloudflare, so if Cloudflare was to, for example, once they're done with the land and expanding strategy, and there was to take out some of that sales and marketing expense, which company would have the better terminal would have the sustainable operating margins highest? Would it be Cloudflare or would it be Faslty? It would be Cloudflare, obviously. If you start with a much higher gross margin, once you take out the excess fat, you have that terminal value at a much more compelling business. So here's the thing, right? If you look, the company right now is priced at approximately 17 times forward sales. In tech right now, that's not a criminal amount, not a criminal multiple, but it's not particularly cheap if you consider all the other aspects. So I think that for me as an investor, I would just try to get that confidence that Faslty is indeed capable of continuing to grow at higher than 30%. If it did, I'll be willing to revisit this investment and come to it with an open mind and say, okay, yes, I understand all those other aspects, that it's not going to be a strong cash flow generator, this company, but you know, if the company has quite a sticky product, it could be worthwhile something. So in any case, if you want to find out which stocks I own, come over to Deep Value Returns. You're welcome to do a totally free trial. Cancel anytime before the 14 days and see if it suits you. I think that it's an attractive marketplace. I think obviously that I'm providing quite a lot of value, and it's not just the stocks that I own, but I help you think through the investment process overall. In any case, hope you find this video useful. I'll see you soon.